Good evening, all subscribers and invited guests, and welcome to the Inside Technician special webinar event entitled How to Control Risk, How to Control Real Risk in Trading. My name is Jeff Killian. I'm the Chief Market Strategist and founder of the InsideTechnician.com. On this end, we believe that educating yourself on how to control your risk in trading is your key to survival and putting real profits into your trading account. We believe that incorporating proven risk control techniques into your trading methodology is what will keep you in the business of trading month after month and year after year so that you can realize your goal of becoming a real-life profitable trader. So before we begin, we always have to go back and do a quick disclaimer and keep compliance happy so that we can continue. The Inside Technician, nor any of its principals, employees, or partnerships make any recommendations to trade any securities in any marketplace at any time whatsoever. The services offered are strictly for educational purposes, and the client assumes all his or her own risk when making any of its own trading decisions when trading any securities within any marketplace. Our educational services are all designed to educate the client in employing the correct application of technical analysis to then be able to make better informed and self-directed trading decisions. So back to the title, how to control real risk in trading. For me, when I first started trade, now we're going back about 14 years. My story is that I started studying, taking 3 years off of life so that I could figure out what really works and what works. I started studying with some of the top traders in the world to pick their brains and find out what is it that really works. What's going to work for me year after year so that when I get into this, it's not something that's just going to cancel itself out. I get blown out, and that's the end of my trading career. And their answer was that I need to develop a trading methodology that I can find, track, and trade the smart money to be able to find out what the institutional people, the people who actually move stock prices, what are these people doing? Where are they? When have they made their moves? And how can I capitalize on that? How can I get in right after they're in? How can I get out when they have sold off before the herd mentality turns prices into another direction and I give all the money back that I just worked so hard to make? Now, after figuring out how to find, track, and trade these people, I knew that I had to come up with a risk control plan. And so I spent the latter part of the last 6 months of my studying with all these people to be able to come up with a very strict risk control technique, a critical element inside a smart money trading methodology so that I could get out at price profit targets on rallies, that I could have acceptable stop loss points so that if the market or my trades went against me, that I wasn't going to give a lot of that money back. This is the beginning of real risk control in your trading. Knowing not only when you're going to get in and when you're going to get out, you need to know if the trade goes against you, where you're going to get out so that you don't give a lot of money back and you keep the money you just made. This is what I want for you. I decided to do this, form this company, and educate people on the correct application of technical analysis so that you can live the life that I live. I'm the one who's living the life that most everyone wants, to be able to trade for a living and still lead a balanced life. That didn't come easy, but I did what I had to do in order to make it happen. And with a lot of encouragement, a lot of support, and a life-changing decision, I decided to give it back to you. The people who would listen and the people who really want this. I mean, really want it. And so this is why we're here. So Let's get back into the presentation real quick here. What you're going to see is a presentation of the current state of the U.S. markets. On the Dow side, let's get right into that screen. Delivered over from the Metastock program. Again, what is the current state of the U.S. markets? What are the real probabilities for future directional price movement based on the Dow? And then moving right into the continuous contracts to determine how to control real risk in trading. This is what we're doing tonight. We also have an invited guest tonight by the name of Manny Johnson, a most recent client who studied with me here, actually took the S&P 500 IMA course not long ago and has been trading a long time. And we have a very unedited, bullet-pointed comments from his end to you about what his experience was like here, real life, nothing in between. I think that the best thing about this company and what it can do for you is that we present everything in a fully transparent environment. Most are out there pushing products that don't work because they don't know how to really analyze and trade based on a correct application of technical analysis. Those of you that have been with us since the beginning know that this is exactly what we do here. In this case, we're looking at the Dow, and this is an end-of-day candlestick chart with the volume and subgraph below with a 21-period smooth moving average overlaid right on top. Since the sell-off here, which we predicted back on 5-4, which landed at a new market bottom, which my YouTube video called on 6-5, right here, which is posted on 6-5, before the market took back off. If this was a high probability market floor, and if prices had a day up, we could be long again. And sure enough, that's exactly what happened. So let's take a look at some of the indicators that we follow every day here. And when you're going to create a methodology, when you're going to follow a methodology, when you're going to study somewhere, when you're going to take things seriously so that you can change your life and really become a guy or a woman who does this for a living and makes money every week, every month, every year, and stays in this game, you need to consider who you're studying with and what they're teaching you. Anyone should teach you, no matter who they are, high probability trading. There is no point in trading if there's nothing there to trade people. This is one of the key critical elements of what we teach here versus anyone else. There's a time to be trading and there's a time not to be trading. For example, you could have been flat here waiting for things to develop to the downside. Here at this point on 5-4, along with a lot of the other indicators that we track and follow here, a divergence on the MACD indicator from here to here in this area, indicating future directional movement to the downside across here at about the same area here, indicated that the change in trend was complete. Looking at the money flows, which is one of our key practices here, to find out what's behind the volume that we see on the Dow, for instance. Okay, on a longer term basis, we had a substantial divergence on money flow as compared to the price chart action here. From here to here, leading us in a direction of future price movement to the downside. What else? A trend line violation here at this point. Again, right at around this area, 5455, clearly indicating that all the smart money that's behind the volume has left. And this is where prices will go in a very short period of time, allowing you to be flat, protect your capital here, wait for the next long opportunity, or go short an ETF, a mirror S&P fund, or whatever you like. This is how simple the analysis is here. And all these indicators are right out of the Metastock program. We are in the process of qualifying, in this case, a short move that then found a market floor and traded up again. Here again was a classic, much longer term divergence as compared to prices here as compared to higher prices, the indicator level as compared to its lower internal indicator level, clearly demonstrating weakness within the indicator that had not yet been played out by the prices themselves in the form of an inevitable move to the downside. Now, just looking at these two money flow indicators as compared to volume, it's very clear to see what the probabilities were, the high probabilities were for this move. Now, when we did find the market bottom at this level, we're waiting to see how prices are going to react at this level. Now, on several markets, this, as well as the continuous contracts on the S&P 500 E-minis, which is the primary market that we're trading, right? The floor had also been found. So we had confluence, and we're going to get to those charts in just a few minutes. At this point, the trend line was violated right here, signaling that the chart pattern isolation was now changing for a move to the upside. The setup was here. If we look at the money flow indicator, the Chaikin money flow here, a trend line violation came here as an early warning. From this baseline level, a second violation here, and a third, and a fourth. As the indicator trades through its own internal trend lines that are drawn within it, another technique we teach here, very simple to follow. It was clear that more and more strength is building up and building up, even though this chart pattern is a classic shakeout to take all these stops that have been placed in the market by all the herd mentality market participants, but not the educated traders who study here at the Inside Technician, full well knowing and identifying this for what it was, waiting for the opportunity to get back in and go long from here until the indicators told us different, that the money had left and we would be flat or short again. So what you're looking at is an endless cycle of setups, triggers, follow-throughs to a previous price profit target laid out by levels on the way down, incorporating Fibonacci technology in the form of ratios. I like to call it technology, you know why? Because technologically speaking, now you're going back in 1500s, Fibonacci was around. The only technology they really had were their minds. Intellectually advanced people who turned the tide on mathematics into the so-called technology that you see today in trading software platforms that most people don't understand. They just trade off of them freely. We teach a proven, structured, learnable, and repeatable process that incorporates the correct application of Fibonacci ratios to know how to connect these levels to be able to aid you, help you in determining where these prices can go. For example, here. The earlier application was from this level to here. And as you can see, prices traded right through 23.6, through 38.2, down here, and almost landed exactly at 61.8. Have traded up and essentially ran out of momentum here at the 23.6 level again, are trading just about at the 38.2 level right now, caught in between this trading channel. So this is an extremely accurate method to determine, again, a potential market floor and where things will turn around and trade into a new. This combined with learning how to find these market floors, which is what we laid out here on the Dow, right? And the continuous contracts would have given you more conviction when we had these few updates here to be long again, along with the trend line violation that I showed on the previous chart being right here, 6-6 across, indicating that with one more update we could be long and trade from here to here on a short-term basis. This is a very simple, repeatable, here's the key, duplicatable trading methodology that I created. 3 years of hard work about how to find, track, and trade the smart money, and do it in a way where that if you knew this is where the bottom was and prices traded up through here, you could have put a very close stop right in and around this level right here, and I'll paint this red because this is what we teach here, and I'll make it larger so that everything is clearly identifiable so you know where you stand every single day. A stop level could have been located right here once you knew you wanted to be long again, right? Based on the profit target, you have the distance from here to here, here to here, and your stop is only 1/4 of this area. So the risk to reward ratio becomes the distance from where you get in, from here to here, to the price profit target. So the distance from where you get in at the end of it all, as compared to the stop level, to protect your capital and control your risk, it's very small. But full well knowing that everything is going to trade to the upside, because you know, based on what you've learned here, that if things turn right back around, you get stopped out with a very small loss. Protect your capital and maximize the potential to hit this price profit target here. This is one of the critical elements behind trading for a living, staying in the game, staying in this profession, better said, a business, month after month, year after year, and living more of the life that you want. How many people out there right now, let's be honest, put your comments in the question from your mini control panel. How many people would like to trade for a living? Just type in your answers yes, and I'll know who you are. We have over 65 people in this room tonight. There's got to be a lot of people out there who really want to learn how to trade for a living. Tell me who you are. I mean really learn. How many people out there are sick and tired of working their jobs, sick and tired of the opportunities that are erasing themselves in the United States or wherever you are worldwide, right? Sick and tired of the opportunities that are not coming back. I'm sorry. We have to live in the realities of life. And would like to take more control over their lives, empower themselves to be able to become real-life profitable traders. It's not that difficult, people. It's really not. And I can prove it to you. I can show you the way because I know the way. I did all the work. I'm the guy that went through, I can't even tell you the word because we're in a public webinar. What I had to do to learn how to trade, most people would never do, ever, ever. But because I believe in leadership, and I've had a lot of training in leadership, and because I believe in opportunities, because I'm an open-minded man, and because I believe, because I'm a humanitarian, this is something that we should give back, right? Give other people the opportunity to do the same. I do this. And people who've studied here, I mean, you're listening to me tonight. My passion is so that you can become a real-life profitable trader and get a little more, some security for your family, some of the things that you want to do. And life is short, let's face it. It's short. It's a lot shorter than we think, the older we get. And we have to live in the realities of life. We have to exercise control and make sure that what we're doing with our life is going to give us something. In this case, that something is the money that we need to be able to live a quality life. So, based on what I've covered so far, are there any questions that anyone has? You can put them in the question area, and we'll do the best that we can to answer them on the spot. Any questions? I invite them. The question that you ask might be the same question as somebody else is reluctant to that could help them. Kev, have you recorded this? I want my wife to watch it. Yes, it is being recorded, and tomorrow before 12 you'll get a link in an email because you are a subscriber. And all subscribers get a link to the recorded session that's uploaded to YouTube. So the answer is yes. Everyone, because you're subscribers, will get a link to this recorded session. Okay. So let's get out of the Dow Jones Industrial Average. I'm going to open up the continuous contracts on the S&P 500 E-mini market because this is the primary market that I teach you how to trade, to really trade for a living. Okay? All right. Here we go. And these are all real-time charts, so I'm going to refresh these real quickly to make sure that the data coming through is on the money. Okay. Had a lot of comments come in. People do want to learn how to trade for a living. How about 25? Fernando Ortiz has a question. Could we show the divergence between volume, prices in money flow, and checking? Yes. We're going to close this workspace out, this layout out, and we're going to get right into continuous contracts. And they do have the same indicators, so we'll get to that demonstration. How to control real risk in trading. You are looking at a daily candlestick chart, again, of the continuous contracts on the S&P 500 E-mini futures. And unlike a lot of traders, we use the continuous contracts to trade the near month. The S&P 500 E-mini futures, for those of you who don't know about this market, is quite probably the best possible market to trade as a speculator, as an independent trader. And why? Because unlike forex, the unregulated market that everybody's pushing today is so super high risky. The E-minis have a set spread of 1/4 of a point every time you get in, no matter what time of day, the time of night, no matter what day of the week, what platform you use, doesn't matter. Whatever your stop orders are, your market orders are, it doesn't matter. You pay 1/4 of a point to get in and 1/4 of a point when you get out. That as compared to forex per se or stock trading, where that spread could widen a lot depending on the volatility, right, of the markets and that stock in real time. Forex, for example, the spread could be anywhere from 2 to 5 pips. Just consider that to be 2 or 5 1/4 points, right? That's a lot of money because there's a lot of manipulation in that market. The S&P 500 E-mini futures trades between 1.5 million and 3 million contracts every day. A contract is a unit of size, and this is essentially much smaller than its big brother S&P 500 futures market. So every 1/4 of a point is $12.50. So 4/4 of a point equals $50. So every point move, whether down or up, is equal to $50. Our price profit point moves are calculated in advance to control the risk and maximize the reward. So in controlling real risk in trading this market, Okay, the first thing we do is do a relative comparison of the Dow, the S&P equities, which we don't have time to go into tonight, and the S&P E-mini futures continuous contracts market to determine what is the state. What is the state of the current U.S. markets? Because these markets are highly correlated. And when one moves, the other one moves. So when we know, because now we have found a bottom in this market, just like we did on the Dow, right? And we've seen prices move up. Now we know, because of the additional volume we have here, right? The insiders that actually move prices, that this up move was based on institutional accumulation. And so therefore, with all things considered, all the divergences, all the indicator formations lined up, the money flow, like Fernando wants to see, which I'm going to show you, that confirms the volume as being real institutional buying, right? What are the odds of this trade going against us? They are next to none. And the same application that you're seeing here has the same exact duplicatable application to real time. So you don't have to learn anything else, nothing new. You're taking what you learned here in the beginning of this journey that you're taking to change your life for something better. And you're learning everything on an end-of-day basis, and then you're taking that and you're moving it right over into real time. That's how simple this process is, people. I have a question coming through. After studying the S&P 500 E-mini course, someone told me that they're paper trading now. Okay, the question is essentially, we have a guest tonight from a fellow subscriber who took the S&P 500 E-mini course, and that person from last course is now paper trading. I see what you're saying. Okay, I've got it. How long after I paper trade should I be able to start trading and make real money? A large part of that depends on you. I'll give you the tools that you need. I can guarantee that. Talk to your friend and find out just how much information they got, how comprehensive the course was, and if you put your head down, I don't see why it shouldn't take another month and a half or 2 months. You're going to trade lesser contracts, right? You're going to trade the highest numbered probability trades that exist within the realm of short and long, which I teach you. So you're going to take the best of the best is the point, with fewer amount of contracts, trading less money until your skill level, your confidence level increases based on what you'll make, and then you'll trade more contracts and make more money. I hope that answers your question. The Chaikin Advanced Decline Oscillator, Fernando, should I say Fernando? Buenas noches, Fernando Ortiz. We have a situation here where we have a substantial divergence of more contracts coming in versus the chart pattern on the way down. So let's take advantage of this while we're on this chart. A positive divergence from this area here as compared to here. This newly established market floor on a pivot point low as compared to this area. And something else that we teach here, without getting too complicated, is a violation of a trend line within the indicator itself to confirm that we can be long. Again, that the trend has changed because of the smart money coming in on the accumulation. Here, on the Chaikin money flow, to answer your question, at this point, we have a similar but not the same situation. We'll blow this up a little bit, where we don't have an official higher, lower price and a lower and higher indicator level. What we do have is something that is not an official positive divergence compared to price. But looking at this in the proper context, what we do have is an indicator level that has been established at a base, as well as this chart pattern, and is not traded down anymore and is following the movement of the prices to the upside. The fact that this is almost flat as compared to the shakeout confirms that this is nothing more than a shakeout, and that the relative strength of the money that's coming in, or that has come in because of the volume here, is positive and will move prices to the upside. And divergence on a secondary basis from here to here indicates that the momentum is now increasing to the upside. And the final thing that I'd like you to see here is how prices trade into a chart pattern, a sideways wedge. And, the indicator trades into the apex of here and then trades out of it to the upside, acting as a confirmation. 1, 2, 3 confirmations. There are more, indicating that you can be long and keep your stop very close, again, people, at somewhere right around this level to limit your risk, control your risk, and take that trade with confidence and make a lot of money in a short period of time. Here's the stop area. Here's the confirmation to begin the trade, and ride it up to here, being in and out several times for this move. I mean, again, just like on a Dow, look at the continuous contracts, the substantial sell-off here on the money flow as compared to the volume before the prices tanked. I like to focus on the hard right edge traders and investors because this is where the most recent activity is. Anybody can talk about the past. We talk about the past in terms of the very most recent past because we're always producing more profitable traders, real-life profitable traders than anyone, because we are focusing on how to really read the most recent price activity and act on it. Everything that we do here is designed to give you the actionable intelligence that you need to be able to actually place those trades. Now, Fernando, here we have an entirely different story coming out of the money flow, which is what I think everyone can really relate to tonight. Okay, let's take a hard look at the strength of this positive divergence as compared to the prices. Here is the slope of the trend line on the money flow as compared to the prices. This one's moving down. It's connected from here to here, right? Compared to these two price points, which is the correct application of technical analysis. And the slope of this line is markedly different. So I'm not going to tie up the time and try and get exact here, but you see the point. And again, we'll come in here at this area right here, extend this trend line out into the future, and wait for the violation. This is again before we got into the trade, indicating that all the money had come back in to be able to place your stop one more time right at this level and capitalize on a new trend to the upside, having various trading opportunities in real time, maybe 6, 7, 8, 9, 10 trading opportunities within a short period of time. This move here, there was anywhere from 10 to 20 opportunities on the way down. Looking at the 15-minute real-time charts to get in. Let's see if we can find Manny Johnson with us tonight, one of the most recent graduates from the course. And we'll introduce him as soon as I'm sure that we can hear his voice. Manny, are you with us?
I sure am.
Can everyone raise some hands so I can make sure that they can hear Manny Johnson? You can put a yes in the question area. Please look into the question area to confirm that you can hear Manny Johnson. Okay, everyone. Okay. Yes. Okay. Manny Johnson is a fellow who's been trading a long time, a seasoned trader, and he's got a lot of water under the bridge. And he's freely come in tonight, asked that if you could do this to help inspire and motivate some of you to do what he did to help his trading career get on the right track. So welcome, Manny Johnson, and feel free to spend 5 minutes and tell us about yourself and what it was like for you at the Inside Technician.
Okay, good evening, everyone. I'm happy to be able to be here and watch Jeff again go through a presentation, and it's amazing how much I learn every time I watch it. And that's one of the good things about the market, is it produces nice charts every day, and Jeff's got a good methodology to learn. Okay, I've been trading for 20 plus years. I've worked very, very hard for my money in two businesses that I've owned, and I had turned the money over to professional managers at Merrill Lynch, Goldman Sachs, and I don't mind mentioning the names because I just got treated so poorly with that, which I found that most of your lower tier investors in those institutions, that tends to happen. I kept putting more and more of my retirement money in it, and I kept watching with a horror almost every month at how much it kept disappearing due to being sold into just investment strategies that had no idea, no way they were going to be profitable. In order to salvage any chance of me being able to retire in the future, I began to manage my own money. I had some successes for quite a while, and I was doing okay with it. I was doing a lot better than my advisors were. And so I decided I would try to ramp up my strategies and work with some of the best teachers I could find. I even spent over $10,000 on a course that was just 4 days, and it provided a tremendous amount of talking and conversation, but no real methods to increase my trading skills. Then I heard about Jeff Killian through a close friend of mine, and I decided to take the S&P 500 E-mini professional trading course, just hoping that I would learn something to become a more profitable trader. I'll never forget the second day of the course when Jeff was explaining these Fibonacci retracements like he was showing you earlier. It brought it back to my thought process. Jeff laid out its Fibonacci levels to determine where he thought the price levels would be over the next 2 days. As hard as it is, as hard as it was for me to believe, and as hard as it probably is for you to believe, on the third day of the course, in real time, in front of not only my eyes, but the eyes of those of my classmates, boom, the exact level got hit. To me, that prediction based on Jeff's strategies, that was proof positive that these were real and learnable strategies that you could apply to the real world. So I studied very hard with Jeff, and I have learned his strategies, but I have not mastered them. I hope I'm learning the rest of my life. But the one thing that Jeff gave me was the confidence to profitably trade in the markets that I never dreamed that it would ever be possible to have that kind of confidence. My friends, I'm here tonight for no compensation other than to hopefully help yourself by allowing Jeff Killian to teach you what he taught me, how to become a profitable trader, so that hopefully your dreams will all be realized. And one thing I'd really like to do is, Jeff, I'd like to thank you very, very much for changing my life.
You're welcome. It's my pleasure. It brings me a lot of satisfaction because this is what I want. I wanted it for you, and I want it for everybody who's serious about the opportunity and they really want to change their lives. So Manny Johnson, thank you for being with us tonight. And if everyone could, you can throw up a hand to give a little applause for Manny, because he's a heck of a guy, and he's taken the time out of his busy night to come into this room and be with you, to talk to you. So thank you again, Manny, and good night.
Good night.
Okay, everyone, we are back here. Let's get back to slides that I'd like to show. here. We already covered this slide here on using strict control with our smart money trading methodology. You've just seen one small example of how it is possible to lay out stops and protect your capital, control your risk, full well knowing that if things move against you, you can stay in this business. Anybody who's been trading for a long time will tell you that one of the most important elements of trading as a professional, in business, is that you have to have risk control. My feeling is, I don't call it risk control. It's superior risk management. It's exactly what it is, and that's what we teach. So, I'd like you to let my S&P 500 E-mini futures course teach you how to find, track, and trade with the smart money. I'd like to see you change your life this July by taking my proven S&P 500 E-mini trading course and be one of the next profitable E-mini futures traders that I have helped produce. We are everywhere today, people. We are in SFO, we're in CNBC, Traders World, CME, and more sources than I have the room to post on this PowerPoint slide. You should be able to click through the chat area. You should be able to click through that area in the upper right-hand portion of your control panel. You should be able to do that and get right into it. On the website, you're going to see the page that you can get signed up tonight and make your reservation for the July course. If this is what you want, I don't want you to be left out. Here it is. Just click it, and there is the page. I'll grab it again. It explains everything about it, everything that we go through, all the most important points, and the special price is still held. All previous courses have been sold out. This is what I want you to see. I want you to see how you can go through this process to be able to become a real-life profitable trader and make this happen for yourself. For me, I've already done this. I'm already living the life that I want. This is what I want for you. Futures trading has never been more important than right now. Why? Because the opportunities have dried up. This is the way it is. It's not coming back. We talked about this. Employing the correct application of technical analysis can provide you with a decided advantage over the competition as a singular, independent trader or investor. You follow that structured, learnable, and repeatable, proven process that we teach here to learn how to correctly identify only the true high probability trades and set your stops in an area that you control your risk based on its relative comparison to that high probability trade. You have a winning combination that almost nobody but the 5% category knows how to follow. You learn how to thoroughly calculate your risk-to-reward ratios before trading in every way, enabling you to continue trading year after year again like a pro does. Get signed up tonight for my S&P 500 E-mini trading course and you're going to receive a special Fibonacci control video free. Controlling what? Controlling risk. You can click the link in your mini control panel again in the chat area and you'll get right to the site. If for some reason you're having trouble getting through, okay, just log on to the site. Everyone should be able to get through tonight and get signed up for this incredible course for a price that is still being held at a fraction of what everyone else is charging for less actionable intelligence. To everyone who's come into my room tonight, I thank you for being with me, and I look forward to working with all of you in the next course starting July 17th, 18th, and 19th about how to become a real-life S&P 500 E-mini futures trader. Good night to all. We'll see you on the next IMA webinar.